Hello, everyone. Welcome back to another training video. Today we'll be talking about we'll be diving into a fundamental aspect of forex trading. We'll be talking about the different form types of order types and market orders, right? There are five. Um, I think there's actually seven, but we're going to be covering the five order types. And the first one is market execution. Then we also have buy limit, sell limit, buy stop, and sell stop. Let's get started, right? I'm just going to break these down very simple so everyone can learn. And if you have any questions after this training video, always feel free to reach out. We can schedule a one-to-one and we go a little more in depth, okay? So market execution is very simple. It's just you're basically entering the trade at current price. So if we look on the screen over here where my mouse is at, you see that price is 0.93650, right? So you're entering the market at that current price, right? Whether for buy or sell, right? So if you take in, say, a market bandit setup and it's for a buy, right? You're, in real time, you're entering the market for a buy position or a sell position, right? You go in your MetaTrader 4 or 5 app, you click on the currency pair or commodity or whatever you're trading, and you click the buy or sell um, button um, based on what you're looking to how you're looking to enter in the market based on your position, right? But you're entering at current price in real time. Simple. The next order pair that we have, which are the following four, are as you can see, is all pending orders, right? Market execution is not pending. You're in the market right away. But the other four are pending. You're not in the market right away. You're waiting for price to move to a desired level before you can enter. So, for example, a buy limit order is simply put that price is currently too high and you're waiting price to lower in value to a certain number. And at that point, right, you expect price to reverse and go higher. Okay. So say I'm looking to enter the trade down here, as you can see, is to over here is, let's say 0.9713, right? But price is currently up here. Current price is higher, which is 91,362, right? So current price is high, right? And I don't want to enter that high. I want the market to correct and hit a certain price point, right? Maybe I can have a trend line here, right? Mixed with support resistance, right? So I want price to hit that level of confluence. And when price hit that level of confluence, based on my technical analysis, I expect price to increase in value, right? So that is a buy limit. So buy limit is a pending order, right? You price is higher, you expect price to go lower. And once price go lower, you enter the trade, right? And once you enter the trade, based on your analysis, you expect price to go higher. Okay. Um, so the benefits of a buy limits is maybe you have something to do, you're busy at the moment. But you want price at this level. So you can put the trade in on your MetaTrader 4 app. And once price hit that level, right? The trade would then activate and your stop loss and TPs will already be set in place. And the trade would then become active. And all you have to do is wait for price either it's going to hit the stop loss or it's going to play out and hit your take profit. Okay. The sell limit is basically the same thing, right? So let's say you think a currency pair will rise to a certain point and then reverse. So once again, this is current price. You think that the currency pair will rise to a certain point and then reverse, right? With a sell limit order, you set price higher than the current price, sorry. So as you can see, current price is down here, but the point of entry will be higher. Okay. So once again, with a sell limit order, you set a price higher than the current market price. If the market hits that price, your order is executed, right? It becomes active, allowing you to profit from the anticipation paid reversal, right? So once again, price is down here. It's just basically a reverse of a buy limit, right? but you expect price to go a little bit higher. And once price hit this level, your trade become active, and then and then price, you can make profit based on that prediction that once price hit this level, it would go down, right? Based on your technical and fundamental analysis. Okay. Now, the next one we have on our list is buy stop. So this is kind of fantastic for traders that love breakouts, right? You set price higher than the current market price. If the market breaks through that level and continue rising, your buy stop order activates, letting you jump into the upward trend. So for example, current price is here, right? You're not sure price is going to either increase or decrease, right? So say for example, there's two levels, right? Price is there, but you have another level below here. Okay. So, you want to, if you're a breakout trader, you wouldn't want to enter in the middle of between two zones. So you're either waiting for price to break this level, so then you could take the sell, or you're waiting for price to break this high, so you can take the buy, right? So with a buy stop, if you expect price to increase in value once it breaks through this level, this resistance, which will become support, right? You set a buy stop order a little bit higher, right? So once price break through and hit that buy stop order, right, your trade become active, and then if price continue increase in value, you would make profit, right? On the flip side, we have the sell stop order. It's the same thing, right? Right. So picture a scenario where you believe a currency pair will drop once it break a certain support level. With a sell stop order, you set a price lower than the current market price. If the market breaks that level and continues falling, your order is triggered, right? It becomes activated, and you profit from the expected downwards move. So once again, price is higher, right? If you expect price to break this level, and when it does break that level, it will continue for the downtrend move, right? You have a sell stop order here. Your order become activate, and if it continue moving in your direction, you make profit, right? So let's look on the chart for real life examples, right? And I actually had one today for US30, so I'm going to show you guys what I mean. So say this would be example of a buy limit order, right? So hypothetically, say we didn't have this area right here. Let's say this, let's color that like very black and dark. So we didn't have that area right there, correct? Now, this would be an example of a sell limit. So we didn't have that area there. So what we did was, I put the order there, stop loss is here, and say take profit is there. So price is not active yet, right? Price is currently here. This is current price. So this would be a sell limit. So I'm going to put sell and then a big L for limit, right? So this would be a sell limit order. So as you can see, price is currently here, right? Where I'm circling, price is currently there. As price move in your predicted area, right? And it hits this level, and you expect once price hits this level, reverse, you set once price push to that, to your entry up here, your trade become active, and then if price continue going down in the direction that you predicted, you will make profit. That is the sell limit, right? Now, a sell stop is kind of the opposite. A sell stop is similar to a sell limit, but you're not waiting for price to pull back. You're waiting for price to move forward, right? So, for example, right? So this is your zone, right? Say price is currently up here now, right? Price is currently up there. So, and you say you're a breakout trader. So price is currently up there, and you tell yourself if price break this level here, right? You expect it to continue going down, right? So what you would do is you set your order there, your pending orders, your entry there, stop loss wherever you want to put it, and you take profit wherever you want to put it. Once price, decide to come down, break the structure and hit your entry, your trade become triggered or activated, right? And now you're in the trade real time once it get activated. right? And if price decide to continue going your direction, as this did, then you make profit. That is a sell stop, right? That is a sell stop. Okay. Let's see if we can find another example. So for example, right, a sell stop order would be pat price right here. This is support. And I say if price breaks this level, right? Price come below the structure here. Once price, if it decide to come all the way down, come down, and hit my entry right here, my trade become active. And if price decide to continue going down, then that would be a sell stop, and I would make profit, right? That's when you use a sell stop order. Now, what would be a buy limit order? A buy limit order be, as you can see, current price is up there, right? As you can see, current price for buy limit is up here. So current price is higher. And if price travel, and once it hit this level, if you expect price once they hit this level to reverse and go up, you use a buy limit order in this scenario. And once price hit your entry, it will become activated and then move in. And if it moved in your direction, you made profit. So this would be a buy limit example, right? An example today, a real life example that I used today on US 30, and as you can see, US 30 hit my target, and I probably should have held that trade, but it hit my trend line and I decided to close out. But an example of that, guys, was this. And I deleted earlier. So basically, I was in US 30, right? US 30 was I entered US 30 here actually, right here. I don't know why it's all over there. I entered right here. Okay. Zoom in a little bit. So let me change this color as well. Let's make that red for now. So I entered US 30 there. US 30 went close to my stop loss today, right? But this was a low over here. So I had another order that if price come down here and break this level, right, I would enter another position, right? So if price come and break this level here, I'll enter that position. Stop loss will be the previous high right here, right? And I'll continue trading this down. So as you can see, as price came and break this, I'm already in the trade here, but as it came and break this level, I took another entry, went a little bit negative, but once again, my stop is there. So price was playing out while I wasn't looking. And as you can see, price just went and played my direction. And this order type that I use here was a sell, right? Stop. Was a sell stop. I can't write with this mouse. Awful. Was a sell stop, right? Once price break that level, I expected it to continue going down. So I used a sell stop order on that trade, and I made good money applying my market bandit strategy as well. So there you have it, guys, the different type of order types. Each of these order types have its unique purpose, and helps you execute your strategy with the position. Whether you're using market execution for quick trades, buy limit, sell limit for strategic entries, or buy stop, sell stop to catch breakouts or reversal, mastering these orders is a game changer, right? Because there's a lot of times that you might be, you look away from the charts, you're not paying attention, or you busy, or the trade is, the price is moving slow and you're waiting, but you have to leave the house, do something, whatever. And if you're in those trades, guys, if you set those pending orders, it could definitely work well in your favor, right? Well, also, I want you guys to remember that practice makes perfect. Always open a demo account and experiment with these orders to get a feel for how they work.